How do you fix a stock that's starting to show signs of slowdown? Announcing a $110 billion buyback seems to be the trick. And of course, what does it mean for us as traders and investors? Well, today we investigate the options market on the S&P 500 for the big flow zones moving forward into non-farm payrolls. On top of all of this, what does Apple's earnings result really mean for us as traders? And of course, what's going on with the crypto market? Did we just hit the low with a big TD9 reading at 57K? More importantly, are there opportunities all around the world? We've been talking about this market for 2 months and it's absolutely skyrocketing. Is there more to come? And what's going on with the biggest hedge in the world dropping to a new low over the last 24 hours? This one is certainly worth watching. Let's go through stocks, commodities, and cryptos around the world right now. Well, welcome back everybody to The Daily Show. My name's Tom, and as always, we're going through the macro, the data, the latest indicators, and the hottest charts together. If it's your first time here, then why not subscribe and smash that bell icon? We help you bring a better understanding to why these markets move and where the flows are coming from around the world to help give you edge in these particular uncertain times. So what's going on with the sentiment reports? Are they showing signs that the bulls are back in control? Well, I think the magnificent stocks are starting to show signs of a bullish sentiment undertone, most of them hitting, or at least if they didn't hit, just offering massive buybacks, the go-to rulebook, by the way, and giving us 38.5% in terms of overall bullish sentiment, also upticking the bull-bear spread back into more bullish territory. So does this mean that the 5 to 6% correction is it? Well, we've really only got mainly 2 big bits of news coming forward that could possibly derail this market right now. And you'll notice here from the Optima chart posted over on X that you can see that there is a small red that came in an overwhelming amount of green. Now, when you get this from sentiment reports, it is pretty synonymous with overall pullbacks usually being more in the correction phase. If you get some reds, followed by a little bit of green, which is where we are right now, then fall through, then you're usually going to the 50-week moving average. And this is the point that we've been discussing. Either right here, right now, or that 50-week seem like the 2 most plausible areas for buyers to come in, with, of course, investors looking at maybe position-based trades, DCAs, or other things around these levels. Let's take a deeper dive, though, into Apple's earnings. Were they good? Frankly, not really. Revenue was actually down 4% year on year. And most importantly, the big growth sector for Apple over the last decade was down 10% due to, of course, concerns about mainland China and realistically, them just getting owned. On top of all of this, we can see here that we continue to feel very bullish about our opportunity in generative AI, according to Tim Cook. We are making significant investments and we're looking forward to sharing some very exciting things with our customers soon. Personally, I'd rather they take that $110 billion and invest it heavily back into AI and improving the company, because I think many people that are longtime Apple fangirls and fanboys would say that, you know what, this company really needs to start getting a move on in this new generation. Are they falling behind? Are they becoming the IBM? We'll have to find out very soon. Here's probably the most glaring part of their overall sheet. You can see here that we have a pretty decent decline in overall net sales. And that's not really great to see on Apple. And if it wasn't for these buybacks, the numbers here really predict that basically this stock wouldn't really be going up. So were most people right to be maybe a little bit negative on it? I think yes, but the price action rules supreme. So of course, as we'll see on the charts later on, things are starting to show signs of turnaround. And if it does stick the landing of where it ended up in post-market action, then that could really show us that the markets are turning towards the upside, because basically buybacks can bring big bulls into these markets. I want to talk about leverage here for a moment. If you've been following Cocoa, you would know that Cocoa got absolutely crushed this week, sending Hershey's, by the way, up, which we kind of speculated on one of our live shows. But Cocoa got crushed due to over-leveraged positions. And I want to just alert everybody, be very, very careful with what's going on in the yen right now. We are seeing huge bearish positions on the yen, the likes that we've never seen before. And whenever someone goes too much in one direction, it can often get unwound. That's exactly what happened in Cocoa. You know it's eventually going to happen. It actually happened in semiconductors earlier this year. And of course, that led to the pullback, which we talked about together. And you'll notice here the Japanese yen hedging positions are just getting ridiculous. And the last time we saw this, 2007. Now, if this ends up unwinding, you can see what happened in terms of overall Japanese yen position and where the yen went to. So just be very, very careful. I don't like to trade these types of things because they have so much volatility in them. And I think you need to be very careful as an investor or trader in those particular pairs, especially if you're a currency trader. It can slip upwards of hundreds and hundreds of pips, which means cents and cents and cents in just a few seconds. If you don't believe me, go check out a Euro Swiss trade from back in, I think it was like 2014, something like that, when they took away the peg, and it was wild. 20 to 40 cents lost in a matter of 5 minutes. So be very, very careful there. When things unwind, they unwind violently throughout the network. All right, let's go through what's going on here in overall sentiment switches, sector rotations. The last 24 hours actually had some really nice upticks in two areas that I'm very interested in right now: clean energy and solar. Now, if you've been watching our live shows, if you're a member of our Market Masters Club, links in the description down below, you'd know that solar in particular is something I'm looking at very closely here because I can see a sign of possible bases. Now, some other things we've been talking about, of course, strongly is utilities, gold, and metals and all of those good things. But semis were coming back big time. I think things like SMCI and a few others, even AMD, started to hit some lows that were very interesting over the last 24 hours. Maybe there's opportunities there. We'll look at them later. So clean energy now has seen rotation in it over the last 5 days to 8.56%. Not probably too many people are thinking about this, but these two markets starting to show signs of base, and they're all markets that are usually incredibly sensitive to interest rates. So are we starting to see like the topping of the dollar, as we mentioned before, and a few other things? Let's jump into the charts for the S&P first, then we'll go through some correlations, and then of course we'll try to make some kind of assumptions on what we're seeing here from price action breaks. So the S&P 500 first, we're still trapped between 51.25, which is the positive gamma switch area, and of course 5,000, which is a negative gamma, huge overload. This is where we're trapped right now. And the trade that really was there yesterday, in my opinion, was the trade from 50-60 area back down to the open zone or the closed zone of the previous session. And then the rally was probably the most interesting component. So who won the day? Well, you can see here, it looks like the bulls won, and realistically they did. In the morning, we got the gap fill, then we got the rally off the 5,000 base support, and we ended up moving into pretty much the most traded zone. Now, what is the most traded zone? It is 50-60, and you'll notice that after hours, we've actually plowed a little bit higher, thanks in part to Apple's earnings. So what are we seeing? Well, we've got a huge amount of puts sitting at 50-70 into the non-farm payrolls, and we know that we have a massive gamma switch that sits around 51.25. So if we manage to get through this zone, I would say that maybe the correction is over. There's only one last point really the bears can take control of the whole market, which is the 61.8 to 75 fib retracement. And if we manage to fall below 50.70 and stick it for most of the Friday session, that may create negative gamma cascade. So basically where we're seeing huge amounts of options needing to be hedged into the close. Let's explain why that is. By this chart, you can pretty much see it. This is the 3rd of May. Obviously, this is the 6th of May. And you'll notice here that 50.70 has huge amounts of puts on it. So why did the market come back up to 50.70, 50.80 right now? Why is it there? Well, in my opinion, because it's being held by this put support. Now, if that gives way due to non-farm payrolls, you'll notice there's a lot of overall puts in the market for the one-day option expiration. That can then force the markets down. The next level that we'd want to be looking at the markets to go to is 50, 30, and 5,000. And that's because, as you'll notice, on the Monday, so this is next week's trade, that's where we have the big put support. So it looks like at the moment we could get a lot of hedging down to 5,000. If we end up going below 5,000 after non-farm payrolls, of course, that means the bears are in full control. We're going to most likely see that 50 weekly moving average. And there's a lot of moving components here. Really, this week's been hard because we're trapped within zones. Buying the bottom, selling the top. Some people would say that's easy. It is in hindsight, but of course, you've just got to look at each day on its merits and specifically be watching these 0DTEs. They're really making a big difference in terms of hedging by the markets. So NASDAQ CTAs, what are they doing? They're kind of hedging their bets as well. They certainly did buy the 20 weekly moving average. Also, we saw the S&P buying the 20 weekly moving average. Of course, CTAs love buying the 20. They love buying the 50. They could still unwind their position. Everything comes down to the weekly close, so we'll be watching that. From the perspective of what are the better sectors, what sectors have been doing well, this chart doesn't show you this, but I would say that clean energy and solar are starting to uptick a little bit, not above their 50 days though, I would say just yet. but utilities has been one of the strongest. Energy, of course, starting to weaken, but coming into a very nice zone that we'll see with oil very, very soon. And we've, of course, liked the metals and all of those things. Semiconductors also starting to get a little bit heavily sold, which is starting to see some rallies that we'll look at in a moment. So utilities, I do like these. Now, you might say utilities going up means the market's dead because it usually means the market's going defensive. That's true, but this is a very specific time. I still think we're in late cycle investing, but I have a feeling that maybe utilities forward PE is going to improve a little bit over the next coming years. So we're trading just above 15. It's a real reason that we could go to 20 at some point. So utilities are interesting, actually, if you are scared of the markets. They've started to show some really nice price action over the last month and a half. What about the S&P 500 from defensive or strength kind of lines? Are we seeing New York Stock Exchange weekly net new highs or lows? We're still holding above that kind of zeroing line. So really, we're still seeing a generalized bull market. The market is not showing huge signs of weakness. We did get a little bit of weakness back in the October area, but we hit that massive critical point. I don't see this as a great read to, oh yeah, we want to go bearish when it goes red. But what I do like to see sometimes is when it goes green, when we're looking at the overall market, just kind of gives you that little bit of confidence that things are looking better. Which areas are doing best in the market? Well, as usual, if we are pulling off a base, generally large caps go first. That's what's been increasing. You can see here large caps are showing a sign of uptick. Mid caps and small caps still showing signs of lagging. All of them were showing breadth signs late last year into this year, but realistically at this stage, we'd like to see them all start to uptick for the market to be healthy and looking like it's good. So which area should we be watching? Well, I think the biggest one is going to be the US dollar index. You can see here it's kind of like consolidating right around this level. You can also see US 10-year yield consolidating. This is going to tell us a lot about what the market wants to do next. Generally speaking, the US dollar loves a good bit of interest rates. So if interest rates are up, everyone in the world likes to invest in the US dollars to receive more money. And we did just see a break to the downside. So if it doesn't hold this exact zone through non-farm payrolls and bounce straight back up, we could see the dollar unwind pretty heavily back down to these levels fairly quickly, I would say. And that's going to bring, things like solar, clean energy, yields, all of these things will start dropping at least temporarily for now. Where are the best opportunities in the world? We've argued for a while that China's been coming out of a horrible, horrible downturn in terms of stocks. K-Web doing very well. Chinese big tech and AI doing amazingly well. We've got so many reads over the last 2 months that have shown us bottoming techniques. And if you want to find out more about this, then subscribe to the channel because, of course, we've been discussing this for quite some time now. What about election years? Can we expect still a 10% pullback? It's possible. If we take out the outliers, we get an average of at some point this year, generally going down around 9.95-ish%. That's not too bad. I mean, obviously, if it does come down, could this be one of the periods? Historically, when we run like we have, we do tend to see it. I'm not sure if I'm completely betting on that, though. 110 billion buyback, the way the MAG stocks have done it, it's really just going to come down to inflation, non-farm payrolls, and if this market is going to go back into that positive gamma situation. This is the way that we usually track it. So you can see here the correlation years 76 and 12 both had pullbacks. We're at around, of course, this point right now. And in this area, we did sometimes see further drop-offs in both of those, which is why we get those reads of May being still not a great month. And then we tend to go into the bullish case. I think for the bulls, though, the key here is that in all correlations, we've generally ran higher. And I think with these buybacks around, it's hard to see that the markets are going to freak out too much. This is ridiculous, but it's a pretty big deal. Earnings season, still a little bit coming out on Friday. You'll notice over here, we also had a movement of expectation of negative, positive 4.5 from Apple. Turned out it was even bigger than that. So you've got to be really careful this earnings season. Hundreds of billions of dollars going around. But let's jump into the charts. The VIX first up, back into bulls kind of starting to get control of this market. Below 15, the VIX is not freaking out. This is usually a pretty good sign that the markets are starting to find some strength in them. What about the options and bonds? Slight uptick. Still overall, you'd have to say it's not freaking out completely. So we'll watch that one very closely after the Friday in our weekend video. High yield junk bonds on the rise. Again, considering yields were down a little bit, that makes sense. But I think that overall bonds weren't freaking out, which is key. Overall, we also saw liquidity start to increase a little bit into the market. So That, again, supportive of the bulls trying to buy here. Again, if they can get through the gamma flip zone, that's going to be a big area. And then we move over to some of the other leads, such as Dow Jones Transportation Average, a very strong close, you've got to say. If you're looking at this, this is a very negative looking candle. All of a sudden you snap it with a bull like that. That shows you kind of Wyckoff style baselines. And if that's true, then again, the bulls are starting to take control of this market. Things are looking more positive for the bulls. Another one that you want to focus on is home builders. Did they snap the bad trend of down? Well, they did a little bit. Nowhere near as much as transportations did, but they certainly did improve. Copper pulling back, that's good. It's expected around this area. I'm very bullish on copper long term, but I do think it needs pullbacks. 4.4 and also 4.25-ish zones where I could see bulls trying to rebuy copper, but it's been a very strong trend. Now we move over to dollar. So dollar tried to break out. As we warned several times, this was not the breakout high. We needed at least a 106.50 to 107 zone, and the reason was quite simple. We knew that there was a lot of potential resistance here. The market is still actually on support. You might be, as a technical analyst, thinking, oh, it broke down, I'm going to go short the dollar. I think, wait. Even though that looks like a flag that broke and then took the low, there is a little bit here, and this is actually a block. So basically, we have still got support on the dollar. To drop that and go back down to like a 104 level, we're going to need to see this level broken. Then rallies should be met by sell demand. I think this would become a very good sell level if we were to do something like this. So the dollar, I believe next week or even on Friday, may have some amazing trades coming into it. But wait and see. The bull's still theoretically in control of the US dollar for now. We'll see how non-farms plays out. Now that's led on to the gold trade kind of hovering around. Still confused by this trade. I love gold. We've talked about it together. My personal opinion is gold could hit 3,000. Of course, don't go and do anything with that. But, my opinion is that it for a long time has been that that's probably going to be how this plays out. Now, with gold, I don't mind it having a nice pullback because it had a monstrous run and it makes sense to get nice pullbacks. For gold bulls to take back control, I think they're going to need to push it to 23.52 plus. For gold bears to take control, they're going to need to push it underneath 22.80. Now, if they get down below there, could we be going for a flash sell into 21.72? It's very possible. I am looking very closely at how gold trades, but they're the key levels I'm looking at. Now, oil, on the other hand, very nice. Starting to hit into our favorite great bull zone. So we knew that the good bull zone, once it came back down underneath this level, was probably going to give it up. It did. It's come back down now to the great bull zone. Have we seen structure? Well, small time frame traders would be starting to look at this and say, well, maybe we need to get it above 79.888 a barrel, and that's starting to show signs of life. This is where I expect bulls to try to find some control in this market. They might do something like this. I don't know what they're going to do exactly, but if you're playing chess with the market, so if we know it's a key level, we want to see reactions. We've seen a little reaction. We haven't seen a follow through. Remember, you are better off buying the V than you are buying the dip. But US oil coming back down, people are losing, faith in oil being on the rocket ship. Remember, just a few weeks ago, everyone was like $100 a barrel. I still think it's possible, but it's funny how it happens. Everyone talks about it when it's become such a topical thing. At the moment, of course, energy coming back down. I'd like to see a weekly 20 moving average. So really, energy stocks kind of floating around where you'd expect them to be. Resistance becoming support, those kind of things, all there. Let's move over to some single stocks now. Tesla pulling back, hitting the 38.2, not hitting my trade zone yet. So 173 is kind of the area I was looking for on Tesla, or 162. I do think it's done a turn. You don't get this kind of money squeeze generally without it being semi-real. And as we kind of thought around here, this was pretty much going to squeeze from that point because the sentiment was so bad. It's kind of like Apple. In this case, it was mentioning AI 5,000 times and giving all these new products and stuff. In Apple's case, it's just been, let's announce $110 billion buyback. That'll do it. That'll get it done. Yeah, it may get it done because we have a low. So 1, 2, 3, a Wyckoff style base that's taken out the lows. And of course, now we're sticking a 183 on the open. Now, does that mean, it's time to be, crazy bull and stuff? Well, I think it's going to open very strongly. I'd like to see it still pull back, but is this the bottom of Apple? What do you guys think? Is this just such a ridiculous amount of buyback that it's going to get this thing back up? Are they going to be able to turn the ship and get this company back into, growth? These are all questions that everyone's asking. But at the same time, if the market sticks this movement above the most traded zone, it does show you technical turn. And that's really the only way you can pretty much look at it. Now, coming into the close, because a lot of people have said, oh, well, Tom, you thought this was really negative looking. I did. Negative candle, but then it closes here just before earnings. That was probably your sign. We saw that on a few other positions just before, like some very nice kind of bounce zones. Another one that I've been focusing on is AMD. Now, AMD got hit in the previous session. It actually fell down to a new low, and then it rallied back up. You'll notice it actually created a bullish hammer. Now, if it manages to get above 150, 134, even around here, I'm actually kind of bullish on it around here just because it's been so horrendous. It's very speculative. We'll have to find out whether it can hold those points. Again, comes back to whether the market wants to go bullish and go positive gamma. But if it does, that could be a zone as well. SMCI, similar. You'll notice my 61.8 here, this little blue line. It's kind of setting on net even. Lots of wicks showing that there is some kind of buyer there, probably a bunch of retail traders. And if the 20 weekly moving average doesn't hold for the S&P, of course, it's going to go bad. For now, that's where the buyers are. Strongest stock being Nvidia. Of course, it's trying to drive higher. When we move over to utilities, you can see here it's a totally different trend, much more stable, much better looking. It's coming into a resistance. Aussie traders, you'd be pretty happy, I think, with the overall rotation into this market. Still holding very strong. As long as it kind of holds around 74.50 plus, it's looking fairly bullish. US 2K time now, back at res. Non-farm payrolls will sort this out. Big movement up, probably going positive gamma. Across the board, you'd have to expect these markets to improve. Also, NASDAQ, you can see here, it's also improved back to this level, not above 17,810. So we can set an alert above here. If that happens, it's positive. If it goes below this level, it's pretty damn negative. I think it's clear the levels where we're getting kind of the fight between the bulls and the bears in these markets. All right, let's move over now to Bitcoin. So I'll just load Bitcoin up here on the charts. 20 weekly moving average, which is what has been found to be supports a few times now. You can see support, crushes it a little bit, goes again, is 57K. So the market is showing more resilience. Now, originally I thought we'd go straight to 52K because there was no wall. Then in the last video and on X, I kind of went through and I did some further analysis and I found that there was actually a bit on 57K, which I announced on X, because we have more than you think here. There's actually a little weird block in here. You've got a fib, you've got some anchored VWAPs that sit there, you've got weekly 20 moving average. All of these things are bringing bulls. You can see there's some bouncing going on. Too early to tell whether they really want to pick it up, but I think on the law of averages, if you generally in a bull market expect negative 15 to negative 30%, we hit negative 23. So for some people that's going to be enough. Could it do this? Absolutely. It just depends on what the markets around the world. So, the stock market really wants to do as well. 61.5 is going to be that key breakout, I think, for the bulls to get back in command of Bitcoin, though. So it's very interesting chart, certainly worthwhile watching. Will I love it? Well, I won't really love it until it hits through some of these supply zones, because at the moment it's just bouncing. We've seen this all too many times before where it comes up here and it goes bleh. So we'll have to find out. Next 24 hours, maybe the weekend, is going to be the deciding point. Do remember, non-farm payrolls is coming 8:30 a.m. That is 1 hour before the market opens. And if you enjoyed today's content and you want to find out more about what we do, then remember to subscribe and smash that bell icon. Thanks so much for watching, guys. Follow us on some of the socials. We'll see you in the next one. Bye for now.